Hello, beautiful Facebook friends. So how has real estate changed over the last 6 months, 8 months, 9 months, 10 months, basically over this year? That's kind of what I want to touch on today. If you're a real estate investor and you're like, what the heck? Now, if you've been investing for over 15 years, you are well aware that what we've been experiencing over the past 15 years has really been a stable market, and it's been fantastic. It's what we would call a boom market, an up market, a strong, stable economy. What are some of the aspects of what that looks like? Well, it's easy to sell. I mean, if you sold your home or any or other sort of asset, excuse me, over the last 10 years, it was fairly easy to sell. Most of the time, it would not sit on the market, and especially over the last 2 years. I mean, that's what's most recent in our memory, right? So over the last 2 years, if you were a seller of any sort of asset, you probably did pretty well. It was pretty easy to sell, especially homes. But there was a lot of people in the market to buy. And in that kind of market, the values increase and appraisals are continuing to increase and everything is going good. Also, you probably experienced that rentals were pretty strong and people had jobs. Now, the last couple of years was a little bit interesting. It was definitely not predicted or your anticipated up market. But typically in a boom market, people have jobs, they've got lots of money, they're able to afford things, they're able to afford a mortgage. But if they don't have a mortgage, they're able to afford rent. So everybody is happy, everybody's good. If you are an investor and you own property, you're typically able to raise rents pretty consistently and continue to increase your returns over the years. Now, what happened this year? Well, for a few different reasons, we started to go downhill, right? We're in more of a bust, a downturn, potential recession. Now, we can talk about what some of the potential reasons are for that, government being the largest factor in some of the decisions they've made around interest rates. But the results of all of that are a number of things. It's become harder to sell, right? If you have a home or you have any sort of property, it's become harder to sell. You're finding that the days on market on the property are increasing every week. And part of that reason is now we have a smaller buyer pool because they're not wanting to buy. They're a little bit concerned about the instability of the market. I heard it said, I think last week on a podcast, and it was really a genius observation that a lot of sellers right now are living 1 year in the past and a lot of buyers are living 1 year in the future. And that simply means the buyers are still holding out for the hope that they can get the price that they could have gotten a year ago. And sellers are concerned about the shift in the market and they're thinking, well, what if I buy today and then it decreases in value tomorrow? And so they're holding off and looking at, well, what is going to happen in a year from now? And of course, we can't predict that. We can try, but even the best economists are often wrong because the market is the market. It's a free market. And there's a lot of factors at play and you just can't predict them all. And so right now it's harder to sell. There's fewer people buying what they could even afford 6 months ago. They can't even afford now because the interest rates are higher. So they're qualifying for a less amount. So there's all of these things at play. Appraisals are coming in lower than they were before because the prices are getting dropped. So let me touch on one thing quick, and then I'm kind of want to wrap this up with a major observation as an investor. So one thing to be aware of is no matter the market, boom or bust, there is always opportunity. Because when things are booming, the opportunity tends to favor the seller. When things are bust, the opportunities tend to favor the buyer. So no matter what the market is doing, there is opportunity. Please, please, please take that to heart. I see a lot of people acting in fear and they're holding on to their money. They're keeping things in savings. They're just responding out of fear. And I get it. Nobody wants to lose their capital. But there are opportunities no matter what the market is doing. You just have to be wise enough to understand where to look. Or, and let me shift into this other larger perspective, you don't have to be the one to do all the work. So there's a lot of work involved in investing, and there's an equally amount of difficult work, time-intensive work on understanding how to invest in certain kind of markets and how do you do, I mean, there's just so much to learn, and nobody knows it all. So I have found that one of the best ways to invest, if you aren't super experienced, aren't listening to podcasts, reading books, listening to the market analyses from economists, if you're not doing all of that on a very routine basis, you might be better served by joining forces with a team of investors that are already doing that and that are already finding the deals in the market, whatever the market is doing. And as we're heading into a recession, who knows how deep it's going to go, who knows how long it's going to go. One of the things to be aware of, again, is that there's always opportunity, and there are actually some investments that do well and are stable during recessions. And one of those asset classes is multifamily, because fewer people are buying houses. I mean, the most simplest explanation is fewer people are buying houses. They are not buying houses out of fear, and they're also not buying houses because maybe they can't anymore, or they can't buy the house they wanted to, so they're just going to sit on the sidelines. And so what does that mean for rentals? That means rentals go up. There is an increased demand for rentals. And when you think about rentals across the board, I own quite a few small multifamily and single family properties. And I will tell you, if the water heater breaks, there goes my profit for the year. It is just a fact. There is the small units, small houses, or it doesn't really matter what size, but if it's a 1 unit, 2, 3, 4, they get hit much more significantly with maintenance costs than a large multi-unit. So one of the epiphanies that I've had over the last year is that large multifamily is a far safer and more predictable way to invest. And when I say safer, a lot of times people are like, oh, well, if it's safe, that means it must be crappy. I can put my money in a CD at the bank. It's safe, but you're also getting like a 1.25 interest rate. So who would want to do that? That's ultimately negative interest rate when you look at inflation, no matter what inflation is doing. I mean, that's absurd to put your money in a CD, in my opinion. Anyway, I won't go down that rabbit hole. But I just totally lost my train of thought on that rabbit hole. Do you ever do that? All right, so what I was talking about is large multifamily has the capacity to be able to weather the maintenance issues and all of that sort of stuff because it has economies of scale. For example, right now, I'm in a deal, 154 units. So when a water heater breaks, that's like, what, $1,200 out of $180,000 worth of profit for that month? It's like really not even a dent, and I think it's even more than that. It's not even a dent. And the apartment vacancies are very low because when things are booming, people still need a place to live, and in fact, they've got more money, they've got strong jobs, and so they're paying their rent. And in a recession, they definitely need a place to live because they're not going to be buying a house. Statistically, there are fewer people buying a house. So investing in a large multifamily where you're not having to do all the heavy lifting and hours of research and due diligence and trying to figure out all the things and contacting brokers and trying to figure out where am I going to find an off-market deal? I don't even know anybody. In fact, I live in a town in Wyoming that's pretty darn small. And I can count on less than one hand the amount of large multifamily properties we have here. So even if I nurture those relationships, chances are in the next 20 years, I probably won't even have a chance to buy one of them. So that means I need to go to another market. I need to build relationships with people in another state. How easy is that? It's not easy. So when you are able to team up with a team of sophisticated, experienced investors, this is where you can take your money in a recessionary period especially and be able to grow it beyond inflation, so you're actually making a profit. You've got double-digit returns. You can get some cash flow. You can get some great returns upon the refinance or the sale of the property at the end of the business plan, which is anywhere from 3 to 5 to 7 to 10 years, depending, without having to do much. I mean, you want to do your own due diligence, make sure you understand the deal, understand what the implications are, and all some of the moving pieces of it. But guys, you don't have to spend the hundreds of hours trying to figure out how to make it work, because somebody has already done that, because they've already been doing it for decades. They know what they're doing. They've got systems in place. They already have proper property management in place. They know how to rehab the properties to be able to increase the rents so they can quicken the return and not just depend on typical inflation of apartment rents. All of these factors play into the profitability of large apartment buildings and their profitability. So if you have funds that you typically invest in the stock market or in other things that are just fluctuating and you can't really depend on, and especially if you want cash flow out of your investments instead of just keeping everything on lockdown for 20 years in the future, at some point when you retire, if you're wanting some of that now so you can have it now and later, large apartment investing is actually a really great option. I would love to have more conversation with you about it. One of the myths that people have around large apartment investing is that you have to have large apartment investing money. A $20 million property. How in the world could little old me invest in a $20 million property? Because I'm pooling my money with other people. I'm not the only one. I don't have 10 million or $8 million laying around for the down payment on a $20 million property. But I do have a smaller amount of money that I could invest with other people who are like-minded and similar to me, so that we can all benefit from the profit and from the returns and from the growth of the property and all of that good stuff. So in a recessionary environment like we're going to continue to be in the foreseeable future for however long that lasts, there are still opportunities in real estate investing to take advantage of all of the amazing tax benefits that real estate investing offers in a way that keeps your capital safe, the money that you invest, far safer than anything else, like stocks and bonds and mutual funds. I mean, come on, bonds right now, given the inflation rate, are actually at a negative. So if you invest in bonds, you are losing money every month. And last I heard, there's trillions of dollars in the bond market. Trillions of dollars people have invested trillions of dollars in an asset class that is literally losing them money. We can do better than this. Guys, let's be savvy with our money. Let's be good stewards. We can do better than this. If you'd like to have a deeper conversation about apartment investing, is it for you? What does it really look like? What are some of the details? Does it make sense given your financial goals or given where you're at right now? These are all really important questions for you to be asking and really important for you to understand. And I love having these kind of conversations with people. So feel free to reach out to me and let's have a conversation to help you gain a little bit more clarity about where you are and where you're headed. Guys, thanks for watching. I love having these conversations. I love teaching people, opening their mind up to something a little bit different, a little bit new, sometimes a little bit scary, but well worth doing. Have a great Monday.